Hello, everyone. Thank you for joining us today. This is our keynote opening panel. It is a panel that is going to set the tone for the rest of our conference. We are delighted to have joining us for it four extremely interesting individuals in their own right, but also very experienced professionals. And each one of them has had a track record and a career that really enables them to help us understand the context in which we are working, what can be done to combat climate change from where we sit as PPP professionals. So I will start with some introductions, and then we'll go to the questions and the remarks of our panelists. I'll go by alphabetical order. So Hubert Danso has many titles. Among others, he is Chief Executive Officer and Chairman of Africa Investor Group, Chairman of the African Sovereign Wealth and Pension Fund Leaders Forum, Chairman of the African Green Infrastructure Investment Bank Advisory Board, and member of the UNDP High-Level Project Steering Committee advising on SDG investment. One of his many achievements was helping establish the NEPAD African Union 5% Agenda Infrastructure Investment Initiative for pension and sovereign wealth fund infrastructure investors. And believe me, I did not go through all of Hubert's titles. David Duarte Arancibia is the head of the Public Finance Division at Chile's Ministry of Finance. Further, he is responsible for the management of the Treasury, the preparation of the budget of public companies, the negotiation of external credits, and the management and monitoring of the pension reserve fund, and the Economic and Social Stabilization Fund, as well as the country's PPP program. Previously, he was a senior public-private partnership specialist at the World Bank and head of Chile's PPP unit, which he created. Morgan Landy is Senior Director of Global Infrastructure at the IFC. As a member of its management team, he leads investment operations and advisory services, overseeing a $15 billion debt and equity portfolio. Among his many achievements during his long career at IFC were being Global Head of Power and Renewable Energy and leading a push to make environmental, social, and governmental risk management considerations central components of IFC's global activities. Before joining IFC, he worked as an investment banker at Credit Suisse First Boston in New York. Julia Prescott is co-founder and chief strategy officer at Meridium Infrastructure, as well as member of its executive committee and the investment committees of the Meridium funds. She's also a commissioner on the UK's National Infrastructure Commission, a non-executive director of various Africa-focused funds, and a visiting professor at University College London. Previously, she was the president of the Sustainable Infrastructure Foundation, head of European Infrastructure Finance for the Bank of Scotland, head of project finance at Hill Samuel London, and co-head of project advisory at Charterhouse Bank. Boy, I feel very, very humbled to be among you guys. This is awesome. So I will, I think, we'll start with a general question, and please feel free to make your remarks, your thoughts about the general concept or the general topic that we're dealing with. But I'll phrase my question in the following way. Can you tell us what your organization is doing to help PPPs become more climate friendly and resilient? Any policies, initiatives, decisions, or activities in this regard? So maybe we can start with you, David, if you're there. I don't see you on my screen.
But yes, no problem at all.
From your perspective in the public sector and working government, Ministry of Finance, what are some of the activities you can tell us about and how you're doing?
Well, as a policy, I would like to say that this government has an explicit commitment with the environment and the climate change. Also with other policies that can be applied to infrastructure, like gender policies, of course, and territorial quality of the investment. So, in regarding the environment, the climate, Chile is very exposed to the climate change. We have a lack of rain in the central area of the country that have been last, I don't know, 10 years. So basically, the infrastructure investment is moving. What we are doing is basically building a lot of reservoirs or dams to ensure the availability of water. But the most important thing is basically the government, as a constructor or investor, is as any other citizen in front of the Ministry of Environment and have to ask for the permit to do the investment as any other citizen. Doesn't matter if it's the Public Work Ministry or a PPP company who is asking for the permit to start an investment. So that is very important because the government needs the environmental authorization, which contains all the potential impact of the project and the mitigation measure of the project in its resolution, and it's mandatory. You have to do that, so you can, and then you can construct the project. So with that, you go to the social evaluation of the project, which is an economic assessment of the benefit, the social benefits, and the social cost of the project. And then you will have the authorization to spend the money. And the legislation on this regard is the same for any private investment, any direct publicly financed investment, any PPP investment, and any project undertaken by a state-owned company.
Well, thank you very much. I know that Chile is very conscious, really applying SDGs in a big way. So it would be great for us to learn even more as we continue this conversation. Let me go to Hubert. Hubert, you are focused mainly on Africa, but also climate change affects everywhere. As Africa investor, what are your activities in this regard?
Thank you very much, Ziad. A real pleasure to be here. We have sort of two major leadership initiatives that we're really focused on. One is to really see how we can focus on addressing the climate finance gap in particular. And then the second is really looking at the legal and the regulatory architecture for PPPs as it relates to climate change. So really, just to sort of summarize it all, we have an overarching goal really, which is to design and deliver greater public-private finance mandate alignment. And we're really looking for more catalytic private investment pathways that fast track and scale private capital's participation in the green transition. And we say that should really be implemented through what we are describing as institutional investor public partnerships, such as the platform that you're a good keen part of, being the African Green Infrastructure Investment Bank. So let me just talk about that particular initiative. So it's really our institutional investor platform solution. And it's premised on the fact that we believe that there is no purely green single institution, major finance institution on the continent right now today that can assist Africa meet its $3 trillion worth of nationally determined contribution projects. So the African Green Infrastructure Investment Bank is essentially an African Union convened and supported African institutional investor-led global finance initiative to catalyze private capital's participation in the green transition for the continent, leading up to COP27 and beyond. And we recognize that, and doing our research, that the market is quite fragmented, as I mentioned before, and in many respects, the green finance market, we believe that it's very suboptimal. you have a lot of funds that are sort of sub 1 billion, and then we talk about mobilizing $3 trillion for nationally determined contribution projects by 2030, which in comparison, if you then look at the amount of renewable energy investment that's been mobilized globally between the year 2000 and the year 2020, that is a 2.8 trillion. So essentially Africa, according to its nationally determined contribution projects, needs to mobilize more in the next 8 years than the world has been able to mobilize in the last 20. So we think that there's a very significant and important role to be able to, create a platform that can operate at scale, that's institutional investor led, that has a very keen and specific focus on deploying and mobilizing equity, long-term equity for green, bankable and investable projects on the African continent. The second, major key area of focus for us, I mean, if you take into account what the International Energy Agency highlighted at pains, has been highlighting at pains for the last 3 or 4 years, they essentially say that fostering the financial conditions for a rapid deployment of clean energy in emerging and developing markets, and the creation of new regulatory frameworks that will allow for the mobilization and deployment of private capital at scale and at speed is really one of the defining challenges of our times. So with that in mind, during COP26, we announced the Model Law for Institutional Investor Public Partnerships initiative, which we're driving. It's a collaboration with the African Green Infrastructure Investment Bank and the CFA Global Asset Owners Council in association with the global law firm DLA Piper, that was also COP26's legal services provider on record. So the model law aims to introduce and enable the use of a newly designed infrastructure investment procurement regulation and framework directly between governments as owners of public infrastructure and global institutional investors as owners of private capital. And there the real focus is going to be on how to make this work for the net zero transition, and how can that be enshrined in programs and projects both domestically and for the cross-border related situations. So specifically, the model law is a legal and regulatory partnership framework initiative.
Sorry to cut you off, just to make sure that we give everybody I needed to cut you off, but you'll have a chance to continue more on that topic.
Fantastic.
Later.
Wonderful.
Obviously institutional investors coming into emerging markets in infrastructure is almost oxymoronic, because you tell investors infrastructure is safe investment and stable, and then you say it's in emerging markets. Very difficult, Julia. How do you see things from your perspective?
Well, thank you very much indeed, and good morning and good afternoon to everybody listening. If I might crave your indulgence, I'll just give a few moments on Meridian, because we have a very widely spread audience here.
Yes, please do.
Just to say, Meridian is a fund manager and also a benefit corporation under French law. And I'm talking today about what our organization is doing to make investment become more PPPs, more climate friendly and resilient. Little bit on on Meridian itself. We have about 18 billion capital under management. We have 9 funds. We've invested 75 billion of capital since our inception, and have 100 assets that we currently manage across Europe, North America and Africa. Now, look, the vast majority of these PPPs, so we're very much in the right area from the point of view of the conference. And I think it's really important to say that we are also very much focused on greenfield investments, and we haven't actually sold any assets since our inception about 2005. We look at public services, critical public services, sustainable mobility and energy. And we're also in an investor who has created jobs. We have calculated we've created about 185,000 jobs directly and indirectly since our inception. So sustainability is extremely important to us. And one of the ways that we can say it's important to us, and then people say, well, what does that mean in real terms? And I wanted to say that what we've actually done is created an in-house ESG approach based on the achievements of relevant UN SDGs, so the sectors we invest in. So we measure really from the early stages of development, and then we continue to measure on an annual comparative basis using the tool we've created, which is known as SIMPLE, the Sustainability Impact Measurement Platform. And this means that we can see not only how our SDG targets are being reached in the first instance in the investments we do, but also how annually these are being looked at. It also means that we can actually not invest if we feel that these don't fulfill the sort of requirements we have over time in terms of supporting the SDGs. Obviously, 17 major SDGs, multiple subsets of those, but what we focused on: resilient cities, clean, affordable energy, climate action strategy, decent work and gender, and biodiversity. And what these 5 pillars do actually educate our approach, and they allow our analysis to be focused. Now, I won't go into this. There's a very detailed description of how this works, including a actual interview with the people who make it work on the Meridian website. And if you're interested in using measurement to assess how we integrate climate change into our investments, I'd take a look at that. There's also a series of other ways in which we measure and promote the climate investment. And again, in the interest of time, I won't go through these, but again, on our website, they range from the 2-degree target to a lot of work with the SFDR, the net zero asset managers, and also the ratings that we've achieved for advanced sustainability. One particularly important point I wanted to make, and I think this is a really critical one, is that we place as much weight on the return that we give to our investors as to the sustainable goals, the environmental and social goals that we intend to achieve. And both targets are equally important to us, to the extent that actually, as far as the team is concerned, we have a mechanism whereby if we don't reach the impact goals that we have set ourselves, we will actually sacrifice a portion of our entitlement to remuneration. So we make a return, but we also want to reach our social goals. What I was going to do is actually talk a little bit about a particular initiative that we've just entered into called the Urban Resilience Fund. But I think I might leave that to later.
That's later, yeah, great.
Sounds as though you could talk about it later, but it's a particular initiative we're doing, which picks up actually some of the points that Hubert was making about that importance of having catalytic capital to get investments and projects going, and that's something that we really support going forwards.
We'll come back to you on that. I'll go to Morgan now, and Morgan, IFC is really global, and you've been around the block for a long time, managed some of the most important parts of IFC. How does it look from where you sit?
Well, thanks very much, Ziad, and great to see everybody. Good morning, good afternoon, good evening, and great to be on the panel with Hubert, David, and Julia. So, Ziad, the way we look at it at IFC, infrastructure is a huge development priority. There's a huge gap of infrastructure need versus infrastructure supply. So the question is, what can we do as a development bank to help meet that need and kind of cover the gap? So we see 3 or 4 areas, and of course, it always has some impact on climate, but also is impacted by climate. So I think one of the key things is to think about how do we use PPPs to drive investments in low carbon renewables, and how do we also protect the investments from climate adaptation or impacts on it. I'm having a connection problem. Can you hear me?
Yeah, we can hear you. We can hear you.
Give me 1 second. I think my computer's slow. Give me 1 second. Ziad, are you there?
Yes, I'm here. Can you hear it?
Sorry.
Can you hear me?
Sorry, I think I have some local connection problem. So first, we try to use PPPs to promote direct investments in low carbon infrastructure. So at IFC, a huge portion of our investments in infrastructure now is low carbon, and renewables is a big part of that. So what we do there is in programs from direct projects to scaling solar and different kinds of ideas to try to really roll out renewable investments in Africa, in Asia, around the world, to see what we can do to really create projects that are going to have a positive climate benefit just by the fact of what they do. And renewables is a big part of that. A second thing we're trying to do is embed decarbonization measures in all of our projects. So looking at buildings and making sure they're green buildings, looking at water distribution utilities and making sure they're energy efficient, looking at street lighting and making sure that they're using the best modern technology for efficient street lighting. And one example of that is in Central Asia, the most recent PPP airport we worked on in Almaty in Kazakhstan. This is the first EDGE certified green building airport in all of Central Asia. So we the first thing is to really develop PPP projects that drive investments in low carbon development, such as renewables. The second is embed decarbonization measures in all the projects we do across our business and infrastructure, even in airports, where you don't really think about an airport as a candidate for decarbonization, but there are ways to lower the climate impact of airports in the terminals, for example, and the same in ports, the same in logistics, the same across the infrastructure world. How do we kind of embed decarbonization in the projects themselves across the range of projects? The third area we look at is how do we help improve climate adaptation and resilience in areas where we know climate is having an impact, and we know that our projects that we're financing could be impacted by climate impacts from a negative side. So there's the positive side of investing in green assets, and then there's the risk management side of making sure whatever we invest in is going to be resilient as the climate changes going forward. And here are a couple of examples that we're working on now are in the water sector, where we're many drought-affected areas, and we heard David mention earlier, Chile has some sections of the country that are impacted by water scarcity. What can we do collectively with the public sector, with the private sector, to use water more efficiently? And we're working on some advisory mandates in different parts of the world to reuse water, to kind of use it once and use it again for different purposes. In Chile, we're looking at with some clients on desalination projects to help supply water to the industrial sector by using desalination. So different approaches in different parts of the world, really trying to see how do we improve the adaptation to climate by investing in projects that will help to continue to make sure that infrastructure services, water, electricity, et cetera, will be continued to be invested in and delivered to consumers and industry, even as the climate evolves over time. And last is something we've been doing over the past several years is to take a bit of a climate adaptation lens into all of our investments by screening our investments for climate risk. So for example, in the hydropower sector, IFC has long been investing in private hydropower and PPPs. One thing we worry about now is will the water availability of water. Always when we do our financial modeling, we look at the past 50 years of hydrology, or 100 years of hydrology, if you can find it. But what we're realizing is the future 20, 30 years may not exactly mirror the past. So how do we adapt our thinking to take in the lessons from the past, but also adapt that for what may be changing? So we do this in the hydropower sector, which is maybe one of the most vulnerable sectors, by thinking about assessing hydrology risk, looking at different climate scenarios, rainfall patterns, et cetera, and trying to project hydropower capacity and availability, and thus revenue and financial sustainability, looking at it with a climate lens, as well as a financial lens, an environmental lens, a social lens. So I'll stop there, Ziad, but just to say that we think it's a super interesting area, and as a multilateral development bank, we feel IFC, really this is part of our mandate, is to help us all think about these issues and try to quantify them and build them into our business going forward. Thanks.
Wonderful, wonderful. I'm delighted to hear you talk about water, Morgan, because I mean, we've been reading that 54% of all adaptation costs are related to water. So it's a huge thing. And really, I mentioned it or part of that in my opening remarks. We need to, how eventually we need to stop this populist thing of thinking of water as a free resource that if you do engage in any type of PPP in it, you're just taking advantage, and explain that it's really the cost of purifying the water, extracting it, storing it, transporting it, etc., that people are paying for. But huge thing, the water. Let me thank you for giving us a summary of the work that your organizations are doing. For the rest of the panel, I think it'd be interesting to have a more free-flowing conversation. I'm not going to time anybody, but just if we can keep, I'd like to open the floor for discussion. Whoever wants to go first on something can do so, and somebody follows. I'll ask a question, invite you to answer it. So let me ask this. In an environment of fiscal deficits and record public indebtedness in most countries, we hear more calls for increased private sector investment in infrastructure and in the delivery of social services. Yet faced with global geopolitical uncertainty and rising inflation and interest rates, private sector investors are increasingly more reluctant to take risk, especially in emerging markets. What can be done to help them? What, in your opinion, can governments do? And what can be done to help the governments do to attract more private sector investment during this phase? Whoever wants to go.
I'm very happy to speak.
Okay, we'll start with Julia and then David.
Sorry, thank you, David. I apologize for jumping in front of you, but I guess I was looking at the line of to attract more private investment, and as a private investor, it's really almost a sort of list of activities. I mean, as I said, we invest very actively across Africa, but also Europe and North America, and I think what has been most important for us is to make sure that the countries where we're working have very clear pipelines and intentions of what they want to do. We also have a focus on investing in essential infrastructure, and infrastructure that also has a clear business plan in terms of taking it forward through the process. This isn't always very easy because often government policies come out and then they are rather sort of given to the private sector. Whereas it's really important from the stage of policy until realization that there's a very close public-private partnership that takes place prior to building as well as during building and during operation. Because I think then we can work together to come up with something that becomes ultimately investable. And the real issue that we have at the moment is a lot of need, a fair amount of money. It hasn't all disappeared, a fair amount of money, but that relationship between the two is not very well defined. So very clear plans, a structured approach to risk, a good way in if the risks appear to be insuperable to look at a blended types of processes. So we're looking at, for example, I'll take some risks, construction risk. It's not always possible, but maybe we can have a blended approach towards taking some of that construction risk. In terms of revenues over time, again, a blended floors in terms of revenue, a positive and blended look towards currency risk. So I think it's having that pipeline, understanding what the risks are, working with the private sector during the preparation phase, as much as obviously keeping to the bidding phase, but then doing that, working out what the best blended solutions are.
Excellent.
Yeah, I might just want to add into what Julia is saying there. I think if we're really looking at how to stimulate, in particular, the project development phase, one of the greatest stimulants is confidence. And from our standpoint as the asset owner community that are increasingly looking at innovative ways to actually allocate to the pre-financial close project development phase, the biggest test is really how many projects do you bring to financial close. So the more we can see a commitment demonstrated through more transactions reaching financial close, we think that would send a very, very powerful signal to the market. There's also this conversation around, the quantums of projects that are needed within a very short period of time. So we also feel that there's really good opportunity for private sector project developers to be able to enter into strategic service level agreement type collaborations with governments to actually provide services to accelerate the finance readiness of a pipeline of transactions that we as asset owners can deploy capital to, and deploy that capital to those at scale, with the knowledge and comfort and understanding that if once the legal and regulatory framework is enabled, that we will be able to deploy that capital at speed. And these are some of the key ingredients that we think are going to be really important at the sort of project development, project preparation phase. So just to add on to Julia's points.
Great. Let me go to David. Sorry, David.
Yes. I just wanted to mention, I agree with what Julia and Herbert just say. I can also, of course, you have to balance the risk allocation, bankability, and affordability of the project to make the project. And when you find the intersection, that is the deal you want to do that. Yes, but I wanted to talk about what you can do from the public finance side. Basically, what we are doing is basically we set a level of sustainable debt in the medium term for the country. And also with that, we set a path for that debt and a structural balance. This is a balance, a structural balance compatible with that path of debt. So we are basically basing we are giving to the market the signal of fiscal responsibility and responsibility in the fiscal management, so we can honor our commitment. If we provide a guarantee, we will have the money to pay for that, and we have, or in a social project, we commit a payment, an availability payment, we will have the money, because we are giving a signal of being fiscal responsible in the medium term, setting this in a public decree of the level of debt and the fiscal balance compatible with that level of debt. And also, I would like to mention something that happened in the country during the pandemic. Most of the Chilean PPP contracts are based in the present value of the revenues. So if you have a lower demand, the contract is extended automatically. You have a higher demand, the contract is shorter. So what happened with the pandemic? You have a very low demand. The contract is extended automatically. So and also when you have a lower demand, usually you have a lower economic activity. So you have to lower the interest rates, and if the discount rate of this present value of the revenue that set the term of your contract, is that rate is higher than the monetary policy rate, you don't have to do any negotiation, because the financing for that reduction in the revenues can be financed at a higher rate, at a lower rate than the present value of the revenues. So it's a little bit complicated, but I really made you to study that mechanism.
This is a mechanism that Chile has used very successfully, and I encourage everybody that hasn't looked at the Chile's experience with this mechanism to look at it. Morgan, I mean, you and I have talked before about like the French approach in concessions to have flexibility, or maybe you want to comment on this or other things. There's a question regarding incentives that the government can deploy for renewable energy projects, especially.
Sure, thanks, Ziad, and I'm glad to kind of add with my perspective. So I mentioned in my opening comments a program called Scaling Solar, and I'm not sure if the audience is aware of it, but basically it's an idea of trying to bring solar power to countries and markets that might not otherwise attract the interest of large international investors. So it's something that's been worked on. It's a public policy discussion. We started in Zambia, and it's been now worked in many countries in Africa. And the first one was reaching now Central Asia and Uzbekistan, of trying to see what would private investors need to invest in these markets for solar power, where the costs are coming down quite dramatically over the past 10 years. And how do we help the public sector present viable projects to really get good competition in that space? So this is a program that we've worked on in the World Bank and IFC and MIGA, and trying to cover all of the risks for investors, but also make sure the development benefit is there for the government. What we've seen is if you can develop properly structured investable projects and really take away many of the risks that investors worry about, you can really attract a lot of competition and drive down the tariffs that governments are delivering infrastructure at in a major way. Now, sometimes the tariffs go too low. And what we're seeing now in the market is with the supply chain challenges in the solar supply sector in particular, but also in wind and other parts of renewable, is sometimes we see very low prices that are now bouncing back up with new tenders because the cost of delivering some of these installations is actually getting higher given the supply chain challenges in the world and the energy challenges as we're seeing. But I think back to the question, Ziad, of what can governments do to really attract private capital into PPPs in climate-friendly investments is the first is, as David said, set very clear policy guidance. And what does the government want? And then try, as Hubert was saying, to back that up with laws and regulations so people can look at it and have confidence that they're going to make a long-term investment. People like Julia can say, yes, we believe this government has a clear vision and here's the legal framework to back it up, and we're willing to invest long-term. Because remember, these investments are not 3 and 4 year investments. These are 15, 20, 25 year investments or longer. So this idea of confidence is super important. And I'll just give one example of a place that we see is kind of doing this quite well and actually attracting a lot of investment, private investment in renewables right now is India, where the government set a very ambitious climate Paris alignment strategy, and they're creating an ecosystem to develop private projects. Most of the investment in the renewable sector is happening with private investment under an interesting contractual framework, and also creating manufacturing around that. So the Indian government setting clear policy and vision is actually creating kind of a positive ecosystem of people that are investing in different parts of the supply chain in solar. And now we're seeing the same thing happening in electric vehicles, where the government really wants to develop an electric vehicle market, and they're creating concessions to let that happen at the retail side, and also trying to build manufacturing to meet those opportunities. So interesting opportunities in different markets, but the key thing I think is policy, just to be clear and really providing confidence for the private investors. I'll stop there.
Yeah. No, thank you very much.
And yeah, so just to that point, I think one of the things that we tend to overlook quite a lot in the market is the importance of data. The importance of educating the institutional investment, well, at least from our constituency standpoint, and creating more transparency around the types of data that other institutions have the benefit and privilege to have regular access to. And case in point here, for example, governments can work more closely on 2 levels with their multilateral development banks, which they are shareholders and effective owners of. One is in terms of democratizing data that's critical to the investment decision-making process, is the GEMS database, the Global Emerging Markets database, which basically pulls together all of the data on the performance of the project financings and the loans that MDBs have had in developing countries and emerging markets. That data is currently not available to the institutional investment community. So it's proprietary to the MDB world, and it will be so critical for us as the asset owner community to have access to that, so we can potentially, get a clearer insight on the risk profiles of a number of these different markets and sub sectors. So that's one component of the MDB conversation. Then the second, finally, very, very briefly, is we all know that there's this ongoing debate right now about the extent to which maybe the World Bank and other MDBs could better leverage their balance sheets to be able to provide more de-risking first loss guarantee type products to be able to crowd in that $150 trillion plus pool of global institutional capital. I think governments have a very critical role to play there to be able to work collaboratively, because the size and the scale of this climate finance gap and the NDCs being in the multi-trillions, I don't believe that we're going to be able to mobilize the capital without leadership from government to be able to de-risk a number of these opportunities, particularly for us in the developing countries and the emerging markets part of the world. Okay. Thank you.
All right. I think will be great to hear from Morgan a bit later on.
Can I make a quick comment on that, Ziad?
But I was going to give you the floor.
You're going to pass on to the next question.
No, I was going to give you the floor too, because Hubert mentioned data and you mentioned your simple tool. I'd be interested to hear a little bit more about that. And maybe somebody said that the UK has forbidden PPPs, so maybe you can reflect on that, and then we'll continue.
Gosh, 3 questions, which I'll answer. I'll try and be as
succinct as possible.
First of all, on Hubert's point, yes, there is the issue about mobilizing all these trillions of de-risking them. But a point I would like to come back to again is this necessity of making sure projects are investable in the first place as they move out of the policy space and move into the delivery space. And a particular fund that we've set up, which is the Urban Resilience Fund, which we've done with the Rockefeller Foundation, the UNCDF, actually has a specific pocket in there to enable catalytic capital to be given to cities, in this particular case, that actually make projects investable. Because unless you have something you can put your money into that stacks up in a number of different ways, then it is increasing. However much you de-risk, it's increasingly difficult to find a home for it. And we're seeing that because we're not seeing enough greenfield coming through at the moment. On Simple, as I said, there's a lot of information about this on the Meridian website, but it's actually a system that we have created that enables all our investments from that very early stage to go through into the development stage, being measured and monitored, and making sure that we are fulfilling the goals that we've been talking about. But again, that's on the website. The final point I wanted to make is in relation to the comment that came up in the chat about the UK. Now, there's a lot of talk in the UK, and there's a lot of, how can I put it, loose talk around public-private partnerships. I think what has really come to an end in the UK is something called the Private Finance Initiative, which was a very specific public-private partnership structure. And I think that is something that the government has really struggled with over time, although it has created a huge volume of infrastructure that would otherwise not be there. Where they are still looking, though, and if you look at the regeneration schemes that go on, if you look in Wales, where we have invested in a variant of PPP called the Mutual Investment Model, whereby both the public and the private sector investors, then forms of public-private partnerships are still going strong in the UK. I just think people get a bit confused by the nomenclature.
Right. That's right.
Thank you.
Thanks. Yeah, always the thing about PFI and other types of PPP always is a topic. Let me go on to something else. The topic of climate justice, which is a difficult one. But regardless of who has to bear that cost, there is general understanding that everyone should shoulder some of the responsibility. Most investments in PPP projects still seem to go to projects that contribute to climate warming. Where does the responsibility for this lie? What can be done about it by all of us in PPP stakeholders? What about the allocation of investments between mitigation and adaptation? Morgan, do you want to start with this one, or is that?
Sure. I think David, did you want to jump in and I'll follow you?
Yeah. Just to mention that we are living currently an interesting political process. We are drafting a new constitution. Okay. This constitution will have a referendum in a couple of months. Well, it's already drafted. It was drafted during the last 2 years. And this explicitly says that the country will be defined as an ecological country. Every person will be responsible for any damage to the environment, and they have to repair it. So each person will have to be responsible for their actions in the environment, and is responsible to repair it. So that's I don't know exactly how to implement that, but that is a political commitment with the environment that should be, I don't know, regulated later, but is a start in that topic that Ziad mentioned. Just wanted to say that.
That's wonderful to hear that Chile is again, sort of taking the lead in among nations in some of these regards. Morgan,
Thanks, David. So from the IFC side, the idea of climate justice is kind of just a different way of saying what we try to do across all the range of things we do as a development bank working with the private sector. So from our perspective, we try to step back and take a holistic approach of what are we trying to achieve in any particular country based on a country strategy, and then see project by project, looking at the cost benefit analysis and trying to be as broad as possible, looking both at the costs and the benefits. And sometimes in the past, some of the costs, the social costs, were perhaps not quite prioritized as they need to be. And today there's a rebalancing going on where all of us together, the whole development community, is looking at social benefit and social impact from a positive and negative side, and trying to be balanced and include the various externalities or impacts that are around the project. So on the climate space, we've done that as part of the Multilateral Development Bank initiative for Paris alignment, looking at Paris alignment and how do we build that into our business going forward. And all the MDB communities are agreeing to, over the next several years, migrate towards 100% Paris alignment approach in our business, which includes recognition of and looking at the social costs and benefits of projects, as well as the environmental costs and benefits, and designing projects and helping governments to design projects through our advisory aspects with vulnerable populations in mind. For IFC, this kind of comes naturally to us because the IFC environment and social performance standards are kind of the rules we use for ourselves and for our investee companies of what our expectations are when it comes to the environmental and social aspects of projects we invest in. And we developed these 20 years ago or so, but they're always being revised and updated. Actually, for 4 years earlier, before I had this job in infrastructure, I was the head of IFC's environment social governance team. So I was responsible for those environment kind of guidelines and making sure that we actually build them into our projects. And as our projects change, our guidelines need to adapt and change. And I'll just mention one area, Ziad, where we see it right now happening, and we're trying to kind of really step in is many years ago, we were active in the extractive industries, and we no longer invest in upstream oil and gas projects as IFC, but we are still an active investor in the mining sector. And we believe the mining contribution to the transition of the energy transition is super important to have the mining resources that will help the energy transition to renewable energy be successful. But how those minerals are mined is super important, and making sure we have a social lens on that, as well as an environmental lens, an economic lens, and the whole supply chain issue of from mine to turbine or mine to solar power panel is really important and something we're looking at more and more. And we apply our performance standards to that. So the idea of what we're using and who's involved with that production and any negative impacts on the population around those production sites is super important. And I think we're all getting better at trying to do that. And the climate justice idea is just one more angle of that, but with a climate angle. So super important. And I think the global community's mind is still kind of developing. How do we think about this? And from IFC, we're trying to lean in and really help to move that forward. I'll stop there.
Yeah, thank you. It is indeed a difficult topic, there's always, whenever you're trying to allocate cost, I mean, even going out to dinner with friends and like you share equally, everybody pays for whatever they, even at that small level, it's an issue. Imagine like at the level of the planet. And
Ziad, if I may just jump in on this as well. One of the things that we find quite interesting that we're seeing in the market, this is both predominantly at the corporate level, I suppose, is that the just transition is seemingly set aside as, but another initiative that one has to align with and deliver, when in fact it was right there enshrined in the Paris Agreement, what I call the elephant in the text of the Paris Agreement. And at a time when we're aligning the majority of our investments and our operations to try to deliver not only decarbonized portfolios as investors, but how can we use those decarbonized portfolios to green the real economy and accomplish scope 3? We think there needs to be a greater degree of emphasis on appreciating that essentially E is the net present value of S. That's why we're focusing so much on the environment, so society can thrive, as it should. But what we're not seeing is in the context of the evaluation of the S, we're seeing that a lot of companies are not actually seeing that as a core component of the social component of ESG, and we'd like to see in more investor action. We're providing some leadership on that. A number of other groups are to ensure that the just transition is much more of a central feature that's monitored, measured, and reported against within the overall ESG compliance approach.
Thanks. Julia, would comment on that?
No, I can assure Hubert that we're very much reporting on the social aspects of our projects, and they form a very key part of our reporting. I just wanted to go back to the initial point that was made about most investments in PPP contributing to global warming. I think we have to think about in the context of most new construction in one form or another contributes to global warming.
So true.
And unless you're very, very careful about the materials that are used, and you try within the project and within a building project to reduce your carbon as a very conscious activity, then I think we're always going to be in a position that we are potentially having some sort of increase in carbon, but that we are doing good for populations by giving them better infrastructure, or we are, replacing diesel by solar, for example.
Yeah.
So it's really important to incorporate that type of thinking when we're explaining and talking about PPPs. Not that everything is compartmentalized into, bad or good, but actually that there are trade-offs to take account of in a number of these areas.
I just wanted to make a point. It's not just PPPs. I mean, any investment project has to have. Okay, what do I say? Climate justice have to be applied to any investment project. Doesn't matter if it's a PPP, publicly financed, entered by a SOE or private sector, or purely private sector. You have to be responsible for the impact in the environment. It's not just a PPP thing. Just wanted to say that.
Yeah. Well, there's a question for you there, David. I mean, it's a difficult question. I wouldn't know how to answer it, but maybe you can. It says, multi-purpose projects are essential to achieve resilience and social equity. How is Chile's investment evaluation methodology being adapted to deal with these types of projects? So multi-purpose projects, how do you evaluate them?
We have a tradition of having a strong social evaluation process. I mean, we started in the 60s. I mean, in the 60s with the social evaluation. Social evaluation is a class that you take in a regular program in any university in Chile. So it's a very common asset. So basically, the project goes through a very long and very detailed process of social environmental evaluation with public consultation and all the. Actually, it's becoming kind of a difficulty for the country because the process from the commercial close until the financial close is becoming a little bit longer because this more and more detailed process of social and environmental evaluation. But it's our decision basically we will be responsible for the environmental impact of the project. So it's a political decision. We will bear the cost of having longer process of evaluation.
Okay, no, that's understood. Let me go to my next question. Various funds have been set up to assist with paying for costs related to climate change. Among them, the Global Environment Facility, the Green Climate Fund, the Special Climate Change Fund, the Least Developed Countries Fund, and the Adaptation Fund. This is a very confusing panorama for PPP practitioners to navigate. how can this situation be improved, and what resources are really practically available to help governments and investors deal with climate costs? Where do people, designing PPP projects in governments, where do they go to, and where do investors go to get some of the benefit of what is said to be available out there?
Maybe, Ziad, if you don't mind, I'll jump in and see if others can join. So I think Julia said it earlier, that the problem we see right now in the infrastructure, the PPP community in the developing world, at least from where I sit, is the lack of really investable projects. It's not so much the lack of money. Of course, money is never free. Money comes with all kinds of strings attached, and different investors have different risk return parameters, and some people like some countries and some kind of assets, and others like different. So, but there is, in general, in my view, a fair amount of capital out there. The question is, how do we channel that into productive PPP projects in the developing world? That's where the challenge becomes really critical. So the different funds that are out there focusing on climate or fragile countries or adaptation are all important, perhaps a bit confusing because they all have their own particular objective function. But I think that's okay. It's a question of making sure that we are connecting those to the real projects so that we have development on the ground. As I said earlier, there's a huge infrastructure gap. We all need to lean in and do more. We need more infrastructure, not less infrastructure. We need to get these pools of capital into these markets and really invest and develop, of course, in a sustainable way. But the key in my mind is not the lack of funding, it's the lack of projects to invest in that are properly prepared. And if we could really help governments figure out how to prepare more projects that are investable, that are bankable, that have the risk mitigation that investors are looking for, that have the social impact analysis ready so that they know that if there's an impact on communities, it's been studied. The main thing we could do, this would unlock these funds much more efficiently than we're seeing today. So I think that's the challenge as I see it. I don't know if others have different views.
Okay. Julia, go ahead.
I'm just right behind you, Morgan, on all of this. I mean, I think where we are is that there are pools of money available, but maybe what we ought to do is, instead of looking at the money first, we actually try and analyze where the project needs are first. One of the big issues that we have is how are projects going to be funded? And when I'm using funding, I'm differentiating it from financing. Funding is the money that comes from either taxpayer or user of a project to pay back investments to start off with. And sometimes there's a gap in that funding. Maybe the prices are too high. Maybe the environmental aims can't be helped unless there's an additional input from outside what those users or taxpayers are prepared to pay. Maybe there are issues around currency, for example. And I think it's sometimes easier to almost reverse engineer what you're trying to look for to make a project investable, then look around the world and say, can that fund help? Can that fund help? Can that fund help? Rather than saying, I've got this money, where can I squeeze it in relation to the particular opportunity that I'm looking at? And it seems to me if we can get it that way around, then it's going to be much easier to use all these pools of money that are scattered around and available over the globe. I mean, the Green Climate Fund, for example, has pockets that will actually enable pre-financial close development work to take place. So reverse engineering would be the way that I would suggest looking at it.
All right.
I agree with both Morgan and Julia on this, but I think when you look at the reality that there's no single pathway to net zero without the exponential increase of institutional capital coming in. We would argue that the majority of those facilities should be much more accessible to private sector commercial project developers who have the basic expertise to be able to design, finance, operate and maintain those particular projects. We've seen it, for example, in the continent where the majority of the project preparation facilities, 90+% of them were really just accessible to governments who don't necessarily have that expertise. But we think if there could be a greater partnership between commercial project developers and PPP units, where maybe it's a fee that's paid as opposed to a developer comes and they own the project and they want the government to back the project. But we think that there are different ways that that we can intermediate private sector commercial project developers and governments mandated to develop and accelerate those particular projects. And I think that's where more innovation can come, similar to what Julia's just talked about, where there is some pre-development funding type instruments that are available in some of these institutions. But most of the project development community that we know and work with, across the continent and around the world, do not know about half of these different funds. And two, by the time they do their work to research them, they realize that they don't qualify to get access to those particular funds. And then at the third level, they then complain that perhaps they are a little bit too bureaucratic in terms of being able to get access to that funding. Well, those are the thoughts that are going around. And I think the market is going to be addressed when we start to recognize the quantums required to actually address project development needs and project preparation needs. And there are very simple metrics out there, long-standing metrics in the market that give a certain percentage of the overall project cost or capital required that should be allocated towards project preparation. So I think worlds need to come together to really understand that we've probably been grossly underfunding project preparation and project development, relative to the needs of what the science is telling us that we need to accelerate towards in terms of timing for net zero. So those would just be my couple of comments.
I wanted to mention just one. In my opinion, the guidance of the multilateral institution is key in this regard. And I have an example. We are setting up a facility to enable or to help private investors to develop to enable the production of green hydrogen. And we are doing this together with the World Bank. This is a very new technology, still under development, but we are accessing funds from the bank, the World Bank. And for us, that is not the most important thing. The most important thing is the guidance in how to do this development of the hydrolyzers. I don't know exactly how you say the word.
Electrolyzer.
Electrolyzer. Yes. So basically, that kind of help and where we can find funds for develop this and create creative financial facilities. I understand that AFC is participating in equity in some projects, and we are guaranteed the financing with a fund set up by the World Bank, but also we are doing the technical assistance. All these complex structures that you can create to develop this kind of green initiatives can help. So basically, in my opinion, the guidance of the multilaterals is key, because they have experience. They can bring experience from other places to places where we don't have experience in developing this kind of new things. I mean, highways. Okay, you can do highways. Highways have been built since the Roman times in the same way, but to explore new areas is key. The help of the multilateral institutions.
Absolutely.
Can I just say very quickly that we have just financed the first project financed hydrogen, green hydrogen creating power station, which we've done in French Guiana. And we did that because there was a properly funded business model that enabled us to take those early stage high risk or higher risk. It's not, I mean, all this technology is well known, but higher risk costs. So if you can get the funding right and you get the long-term business model right, then you have an investable opportunity.
There is, I mean, following on what David was saying, to me, I mean, I've been involved in financing PPPs since the late 1980s. So I always say it's very strange to me that in those days, in the early 90s, etc., there was so much more creativity in the market for financing PPP projects. and there was more appetite among institutional investors and even the capital markets to buy bonds for, issued to finance projects, etc. My team and we invented the securitization of future receivables, and we started applying that early on in the late 80s to things. So it's strange that now we're set into these more sort of we found certain ways to finance projects, and this is it. I mean, we go this and we do this or we do that, and I find there's less creativity today. I don't know if any of you wants to comment on this.
I can certainly comment on the creativity side of things, because we particularly pride ourselves on being very innovative in the approaches that we've taken. I've given you just an example just now, and also another example with the Urban Resilience Fund, which is largely a private initiative, but bringing blended MDB and private money together.
But I think not project. I think talking about like capital markets. I mean, how do we bring institutional investors into?
Well, I mean, I think again we were one of the first users of capital markets institutional investment across the whole European PPP scene. So I do think people are coming, but I think they have to have the right environment in which to look at this. I mean, institutional investors on the whole will want to have, for example, a rating, so that a project has to be created that actually allows for a rating to be marked against that project. So I think there are many ways of being innovative, and really innovation can grow as you can become more focused and involved in getting a project delivered. It can be really, really quite remarkable what can be done.
Yeah, I think
maybe it's Morgan.
I agree with. Sorry. No,
go ahead, Hubert. After you.
Oh, no. Very briefly, I was just going to say, I definitely agree with Julia's comments there, which is why, our fundamental belief is that the relationship and the trust needs to be built between asset owners as owners of private capital and, governments as owners of public infrastructure. We think that there's a bit of a trust deficit that has, for one reason or another, been able to evolve over time. And I think that there's a real opportunity to have a great meeting of the minds, whether it's what we're looking at in Africa under the Program for Infrastructure Development for Africa, or whether it's Fit for 55 across Europe. I mean, you're universally hearing the same thing. How do large pools of capital work more constructively and strategically to be able to do things at scale and to be able to deploy capital at speed? And I don't believe that particular nut has been cracked yet. And that's why all of our global institutional partners, as well as governments, are saying, let's create a framework, because a framework does not exist that can facilitate that, across a number of different jurisdictions. And I think that's really the missing link. We do not have, it's what everyone's describing as, or the GFANs and the institutional investors call the plumbing. There's an absence of some of the critical plumbing to be able to accomplish this mobilization of capital at scale and to be able to deploy that capital at speed. Otherwise, we have fiduciary responsibilities to be able to, invest that capital for members as well as future generations if you're a sovereign fund. So we need to make the asset class, in terms of a net zero goal, much more attractive. And I think we need to really cement a stronger and deeper relationship directly between asset owners and governments.
Yeah.
One quick comment from my side on the capital markets point. One thing we have seen from the IFC side over the past 2 years during the pandemic is that as the infrastructure greenfield build out has slowed down, as people are waiting to see is the demand there for airports or power or whatever, there's been a drop in greenfield. But there's been a need to restructure, refinance, extend maturities on existing assets. And here we've seen a very interesting peak in tapping of capital markets by infrastructure companies. And IFC has been involved in 8 or 10 of these in the past 12 months or so. And most of them are not greenfield, because generally institutional investors, bond investors don't like greenfield project risk. They like to invest in something where the cash flow is already being generated, not during construction. So what we have, for example, one company I'll just mention in India, a company called Continuum Green Energy, a renewable energy company in India. IFC financed with project finance their wind projects. And then the company decided to take those and to create a larger refinancing at a holding company level and do a bond issue in Singapore, and IFC was anchoring that bond issue. So we repaid our project level projects and invested in a much larger pool of, instead of 2 or 3 projects, 10 or 15 projects, together leveraging in bond investors and capital markets. And IFC anchored that bond issue, saying we're going to invest $50 million of IFC capital in this bond issue, which we think helped to mobilize private investors to come along and invest in that bond. So we're seeing more of this, Ziad, and I do think it's an attractive way of tapping the pools of capital that are out there, but it's not really for greenfield project finance. It's for more operating assets. Thanks.
So actually, this is very interesting, Morgan, and interesting the project that Julia was talking about, green hydrogen. I'm sure our audience would love to know a lot more about this. So maybe they can Google this stuff, I guess. But we're sort of running very short on time. If anybody wants to make any final quick remarks, 1 minute or less, if there's something that
I want to say something. I mean, about what should be discussed in or what practitioners should take into account. We're talking about PPPs, which are long-term contracts. Everybody knows that. And the trend is basically regulations that protect the environment and take into account the impact in the climate are becoming more and more strict. And also, we have the civil society organizations that are becoming more and more influent and strong. So basically, my message for practitioners is when you design the project, go beyond the regulation in taking into the design of the project the impact on the environment and the resilience of the infrastructure you are building.
Very good. Well, I think actually, we one thing about these virtual conferences is that they are better at making sure we stay on time, as opposed to people coming on stage and off stage and taking pictures at the end of their panel. So there were questions from CIS countries related to water data. There's questions regarding the government of Chile, any percentage of GDP that's set aside for risk contingency for PPP. But I encourage the audience to maybe reach out to our panelists later on and ask these questions. We don't have time for all of them. Thank you so much. We need to vacate the floor so people go to the next session. You have been wonderful. It's great to have the experience that you bring to this here today. Thank you so much.
Thank you, Ziad. Wishing you all a very productive summit.
Have a great week.
Thank you very much.
Thank you.
Take care.